Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings, and what we have today is a real head scratcher, a company trying to keep its head above water. If you like your corporate content straight, no chaser, make sure you are subscribed and join our Discord community linked in the description below. So XCF Global Incorporated, or XCF for short, has just dropped a Form 8 and it's a mixed bag. This is a crucial report for investors, acting like a sudden flashing sign if something important happens between their regular financial reports. And boy, is there something important here. Let's dive right into the big news. On the 9th of December, XCF got a rather stern letter from the Nasdaq stock market. It seems XCF is not playing by the rules when it comes to its stock price. Nasdaq requires listed companies to keep their stock price above $1 for a sustained period. Well, XCF's common stock closed below that magic $1 mark for a whopping 30 consecutive business days from late October all the way through early December. This means XCF now has a grace period of 180 days until June of next year. To get that stock price back up, they need it to be at least $1 for 10 straight business days. If they pull this off, Nasdaq will give them a pat on the back and they can continue trading. But if they fail, they might get another extension, but only if they're otherwise playing by all the other Nasdaq rules. The good news, if you can call it that, is this doesn't immediately stop their stock from trading on the Nasdaq capital market under the ticker symbol SAFX. Now moving on to something a little more forward-looking, or at least an attempt at it. On the 10th of December, XCF announced they've entered into a non-binding memorandum of understanding, or MAR1, with two other companies, Southern Energy Renewables Incorporated and DevStream Incorporated. Think of this as a handshake agreement. A starting point for conversations about working together. What are they talking about? Sustainable aviation fuel, environmental credits, and developing new projects. This sounds promising, a move towards greener energy solutions, which is great for public image and potentially for future revenue. However, and this is a big however, this MOU is not a contract. XCF isn't obligated to do anything yet. It's just a way to keep talking. No firm deals have been signed. And then we get into the really interesting web of connections. It turns out XCF, Southern, and DevStream have some significant overlapping investors and people involved. Majid Ladnier appears to be a central figure controlling the sole shareholder of Southern and being a shareholder in DevStream. This same person through other entities also owns a notable chunk, about 19.6% of XCF's common stock. This could create potential conflicts of interest, or at least a very cozy network of business dealings. Furthermore, XCF has an outstanding loan of $365,000 to one of these related entities. There is also talk about business combinations with special purpose acquisition companies, or SPACs, sponsored by affiliates of Focus Impact Partners. Ray Thorne, who is XCFS interim board chair and a director at DevStream, is a co-founder of Focus Impact Partners. Carl Stanton, a DevStream director and an XCF board observer, is also a co-founder. This indicates that some of the key people at Appiel are deeply intertwined with the strategic direction and financial backing of the company through various related entities. Finally, as is standard, they've listed the exhibits associated with this report. Most importantly, there is a press release from XCF Global dated the 12th of December, which likely contains more detail on this MOU announcement. And as always, there is the cover page in an interactive data file for those who really want to dig in, looking at XCF Global Incorporated. It is evident they are navigating a very challenging period, particularly with their stock price hovering below the critical $1 mark on Nasdaq. This isn't just a minor hiccup, it is a direct signal that the market has serious concerns about the company's valuation and future prospects. While the MOU with Southern Energy Renewables and DevStream presents a potential new avenue for growth in the sustainable energy sector, it is crucial to remember that this is non-binding. The company's ability to execute on this or any other strategic initiative will depend heavily on its financial stability and its compliance with listing requirements. The tangled web of related party transactions, while not inherently negative, does warrant careful scrutiny. Investors need to be assured that these relationships are structured to benefit all shareholders, not just a select few. The immediate concern, however, remains the bid price. Without a clear plan and execution to boost that stock price, the risk of delisting or at least significant investor dissatisfaction remains very high. It's a classic case of a company needing to prove its worth in the market, not just on paper. Alright. That's our breakdown of XCF Global's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.